What's up, everyone? This is Niyi Adewale, host of the Ekabo Home Financial Freedom Mastermind Group. This group meets virtually every Wednesday at 7 p.m. Eastern, and the members of this group are committed to achieving financial freedom well before the traditional retirement age. So in this podcast, you are going to get VIP access to the conversations we have about different forms of investment and creative ways to get your dollars working harder for you than you originally worked to obtain those dollars. How you doing?
I'm well. How are you?
Super good. It's been a minute.
I know. I was like, I gotta make it to this one.
Hey, come on now. You've been avoiding us. Can you catch us up? What's going on in your life right now? What you got?
So, quick update. So, remember, I think last time we spoke, I was telling you I was trying to get a new job and stuff so I can, just have a different income and a steady income, I guess, so I can be ready to purchase. So, I did that. I got a new job. I'm excited because now I feel like I'm really set up to do what I want to do. So the timeline is looking good. So I'll be hitting you up next year for sure.
Come on now. Hey, I'm excited. You sound energized, and this is awesome. Now that you got the job, it's just building up the down payment, and literally, they can just look at the quote unquote income that you're supposed to have coming in and qualify. Mm-hmm. So it's just building up that down payment, and then we're ready to rock.
All righty. And I'm sorry, I'm at the gym too. That's what you hear in the back.
Hey, you good. You good. No worries. No worries. We got to get it in. And on the flip side, I know Alpha is 2 days away from closing on his first house hack, basically a home with the in-law suite. Alpha, how are you feeling, man?
Congratulations.
Thank you, man. I'm excited, man. I'm ready to kind of get going, hit the ground running, and just starting this process. Like, I know I have these really big pictures and really big visions, so I'm kind of like trying to focus on it now, but also stay on the big picture. So I'm like, I'm gonna get this set up, and I'm already. I know you already know, but I'm really like, all right. How can I get one in like 6 months? so yeah. Now I'm really excited. I'm actually looking at some business credit right now, some stuff like that, just to kind of help out with some of the furnishing for what we're gonna do, which is gonna Airbnb upstairs and then live downstairs, and hopefully bring that housing cost to at max $1,000, maybe even under that, most likely. So yeah, man, I'm thrilled, man. I actually just spoke to another investor in Texas. He's about like 23 years old. He has like 24 properties, and he was just kind of telling me his journey and stuff like that. So yeah, man, I'm excited to fully get in and become obsessed, man.
Hey, that is the key, and it's just one step at a time to get there. So I'm pumped for you. And, this closing on Friday is going to be a major success. And the fact that you've done the short-term rentals before, I know you're going to crush it, man, with that upstairs unit. I showed somebody else because I have another client that's looking. I was driving around yesterday with them looking at a couple properties. We're looking for homes with in-law suites. And I think you took the last really good one, man, for that price range. Now we're having to like go up, and it's like, hey, I can't find it anymore. I showed them the pictures of that. They're like, hey, this is what we want. I'm like, hey, Alpha's already got that. You can't have that one. so it's good, man. I'm happy for you.
Yeah. And just so everyone knows, I'm pretty sure you guys work with him, but literally we met, I think I spoke to him on a Sunday or Monday. He sent me 2 deals on like Tuesday. He's on the contract like Thursday.
That's a testament to how fast you move. You're like, hey, man, let's get it. I was like, all right, let's get it. Next thing you know, we had one. So, I appreciate the plug, Alpha. Yeah. And Kendall, this is your first time on, man. How you doing?
I'm doing well, man. I apologize for being a little late, but yeah, I'm doing well.
No worries. And I'm sorry to put you on the spot in advance, but anytime we have somebody new join, we always like to ask, for the benefit of the group, kind of a little bit about your background and what you're trying to do from an investment standpoint.
For sure, yeah, I can definitely give you all that. So a little bit about me. I graduated from Georgia Tech with the civil engineering degree. So after that, I went into basically the construction field. I worked for Kroger, managing like their new store remodel projects throughout Georgia. So I did that for about 5 years or so, and then I made a switch into data engineering, which is what I'm doing now. But the reason why I mentioned the Kroger experience is because I'm looking to leverage that to get into real estate investing. Right now, for the most part, I've been looking at like BRRRR or like flip type deals. So that's what I'm focusing on right now. I'm in this position though where at first I was looking at leveraging like family to kind of like invest with me, but I'm not sure if that's the best bet to do that right out the gate. So I do have some money that I could, put into a deal. But I think what's best for me is to do that and doing it with somebody who may have experience so I can kind of learn and grow, especially right now because the market's kind of like, I don't know, it's just kind of iffy right now, if you will. So that's kind of like what I'm looking to do, and yeah, take it from there.
And Alpha, go ahead.
I was gonna say real quick, Kendall, I'm a civil engineer also too. I'm about 2.5 years out of college. Currently right now, I work for Georgia Power, designing transmission and power lines for them. So we're in the same boat, kind of. It's good to see another fellow civil engineer, man.
Awesome, man. Awesome, man. That's dope.
Hey, and for the record, I did civil engineering in college for 2 years before switching to business. So technically, I'm in the group as well. Now, I may not be smart. I didn't make it to calculus theory or anything like that, but I appreciate both of you.
For sure.
And one thing I wanted to highlight from what you mentioned, Kendall, is it was very insightful. So when you look at partnering with others, that's definitely the way to go far, right? Like, I'm getting ready to do this deal. We just closed on some land out in Louisville. A lot of people in here have already heard about it, but we closed on 11 acres and we're going to build 105 townhome units. Now, I do not have the funds to fund that, right? We're going to pull in partners and things of that nature. But the way that we're going to be able to pull in all those partners and use that trust factor is because I've been doing deals for a long time, since 2016, building up portfolio, talking about it, kind of getting it done and moving fast solo, right? And so if you are able to do that proof of concept with at least like your first deal, it builds trust with others. And pretty soon you'll be surprised how many people will come out the woodwork to partner with you on future deals. And so, yeah, that was very insightful, man. You can move a lot faster solo. It seems like maybe a little more comfortable to go in with somebody, but then you've got to kind of have conversations before making any decision.
Yeah, that's fair. So when you say move faster solo, are you saying I should probably just try to find my first deal and do it by myself, or still kind of go the route, maybe partner with somebody, my first deal, and then take it from there?
If you need to partner, and this is just my opinion.
You might be on mute. Oh, I can.
Okay.
Oh no, you're not on mute.
Yeah, no worries. It's and this is just my opinion, right? And I welcome everybody else. I'd love to hear from the rest of the group as well. If you need to partner on your first deal, by all means, partner. It's better to get into a deal and get a piece of it than nothing. But if you have the option of, hey, I can take this down solo, or I can partner with someone, in my eyes, I'd take it down solo so I can get the experience, get the learnings, and then in the future, feel comfortable taking somebody else's money to partner because I have some of those learnings. For example, the first short-term rental that I did, I bought a single family house with an in-law suite, similar to what Alpha's doing. And I was like, hey, let me test this out. I don't even know if it's going to work, but I've heard good things. Let me try this thing out. And lo and behold, it worked. And so I bought another house and another one. And then I started managing others. And now I'm actually getting ready to enter into a partnership with one of the owners that I manage for, where he's going to put down the down payment for the house. I'm going to furnish it, and we're going to split everything 50-50, including the appreciation. And I wouldn't have felt comfortable doing that if it was my first time getting into a short-term rental without testing it out myself. I wouldn't want to lose somebody else's money, because then that source is gone forever.
Got you. No, that makes sense. That definitely makes sense for sure.
Just to kind of add on to that, I think kind of the quote that you was going with is typically you move faster alone, but you go further with a group. So I think that's like the main quote. So really, I think kind of what Nee is saying is you want to kind of gain that experience. So when you do come, you can bring something to the group. Because typically, I think whenever people do real estate deals, typically somebody has the money, the experience, or I think it's the knowledge or something like that. So you want to bring one of those three. So if you already have some experience in real estate, like for example, you went through a down payment and you went through all of the closing stuff, is a little bit easier. But at the same time, though, you could have your first deal just be something bigger, which is you probably need a partner for. But yeah, that's kind of the thinking I think Nee was going for. Just how you can move faster by yourself, but you are going to move further with more people.
That was it.
That definitely makes sense.
It's an old African proverb. I have it written somewhere in my house. I haven't looked at it in a while, so I got to go relook at that. But thank you for clarifying. And Francesco, I see you're back on, man. How you doing?
Yo, I'm doing good, man. It's been since May, since I own this house, and people have had to like really keep me, I guess, like aware about the idea of having a house, because right now it doesn't really feel like anything. And I mean, you were there throughout the whole process. You were the one that actually gave me the extra nudge to go ahead with the process. So, I mean, it's been a blessing, man. I've been very fortunate. I've been learning a lot about homeowning for the last 3 months. And yeah, it's been an interesting process. Very interesting.
That is dope. And you bought a personal home, but the goal is to continue to buy more. And the cool thing is, like, have you talked to some of your friends around the area that are still renting and things of that nature? And have they talked to you about where their rents are going right now?
Yeah, like, so right next door to me, the guy rents out the room, 1,200 per room, and I have a 4-bedroom. And yeah, I'm literally right next door to him, and he's doing 1,200 per room, and he has 3 bedrooms. And his mortgage is not even like the profit that he gains is like a third of his mortgage. And for me, I have a 4-bedroom, 4.5 bath, so each room has its own full bath. So currently, I'm doing renovations so every room can be suitable and livable. So one of the rooms I'm adding a closet, so it can be actually called a, room. And yeah, I'm changing all the hardwoods, furnishing all the rooms. So once I get that going, man, it's game on.
Man, I am pumped for you. And you're glowing. You're out here just shining. I don't know what it is. I don't know if it's
It's the house, man. It's, when you own the house, man, I guess that's what it is.
It's ownership.
That's right. It's adulting. Awesome. That's what this is adulting.
Hey, to the fullness. And oh man, so I think I shared it last time we talked, but I put in and this is fully accelerated. Taking a step back, earlier this year and really late last year, I set a goal by the end of 2024, being able to move out of the W-2 world and into full-time real estate. And the goal was to ramp up the realtor business along with some more of the short-term rental investing. I didn't actually factor in the management of short-term rentals, but that's the piece that's kind of accelerated even quicker. And so, fast forward to today, I put in my 2 weeks with my company, a healthcare company I've been with for close to 8 years. I put that in 3 weeks ago and I finished it out.
Man.
And then and Francesco, you know how long I've lived the company, and kind of the trajectory there. But
man.
My last day was Friday, August 19th. And I took a trip to Costa Rica to go hang out. And now I am back first week as a full-time real estate person. And I got to tell you, man, when I woke up on Monday, it was like energy. Typically, I wake up on Monday and it's like, I'm energized always, but I wake up and I'm like, dang, there's a lot to do today. Now with that off my plate, it was like, hey, I can focus on, things that bring me joy.
It was so beautiful, like seeing someone that, I actually know, like speaking, their dreams into fruition. Because a lot of the times, man, it's very unfortunate, but a lot of people that have dreams don't really, meet the end goal. So it's really interesting because you kept talking about this a lot of the times and seeing it possible, man. I'm very happy for you. Congratulations, bro.
Thank you, fam. I really appreciate it. And literally the reason I was like, dude, I got to do it even sooner than later is we're getting up there, right? It's one of those things where it's like, hey, at a certain point, the golden handcuffs do get clamped on you, right? So the trajectory is going well with the company, and you're going to get to a certain point where you're earning so much that it's like, hey, I can't really make less than. But at the position I was like, hey, I think I could ramp up to that in like 1.5 years or 2 years with this other stuff. And so I'm just excited, man. It was a little nerve wracking, but each day gets easier and easier. I'm like, hey, this is actually kind of cool.
Congrats, man.
Thank you, fam. Thank you. And I want to open it up to the group. What are you guys working on? Any questions that are on your mind? I mean, we've got a myriad of individuals with different experiences on the line. I know as far as Dallas and Kendall, we're looking to get started. Francesco, you are in it. Alpha is closing on Friday. What do we got? Any questions or anything that's been on your mind recently?
I guess my question would be, so being like a first-time home buyer and going into that process, I'm wondering, like, as a woman too, and when it comes to like buying a home and wanting to, so first question, the lawsuit thing, the in lawsuit, I have no idea what the terminology is. So if you can keep me abreast of that, what is that exactly?
Yeah, so from a first-time homebuyer experience, definitely would love to hear from Alpha and Francesco. But an in-law suite is basically a single family that has an income unit. And it's considered a single family, but it's almost like a duplex. Like I'm sitting in one right now, and it's a completely separate entrance to this 1 bed, 1 bath that has a small little kitchenette, like a 2-burner stove, a little fridge, has a sink, has a bathroom, a bedroom. and it has a separate entrance, and you're able to rent that piece out and kind of help cover your mortgage. So I do that for my personal home. I just bought a home in Marietta where I'm going to have 2 units because it's basically a duplex, but it's still considered a single family, if that makes any sense.
Yes, it makes sense. So do you like renovate your home to be that way, or like do you find a home? Like, how is that?
Oh man. So I love, and I try to specialize in finding homes that already have the setup there. For my personal home, I bought a single family that had an in-law suite that wasn't fully ready. What I mean is it had a 1 bed, 1 bath that was separate, like you could walk from the outside, but it had a door that led inside as well. Because an in-law suite is supposed to be for your in-laws. Like they come and stay with you, they're semi-separate, but they can still walk into the unit. And so what I did to make it, separate unit ready is I just blocked off that door and just put like a lock on it to where nobody could get, in between the units. And then I added a kitchenette and boom, it's a whole unit. I could rent that out fully. That's one way. And then for the house that I'm in currently, this one was just fully ready to go. It already had a separate in-law suite, kitchenette. I just had to get some more appliances and it was good. And Alpha, do you want to tell about yours?
Oh, yeah, I could add some information. So kind of when I realized the duplexes in Atlanta were a little too expensive or they required a lot of work, I found out about in-law suites and kind of either called in-law suites or accessory dwelling units. And typically that is like what Nee was saying, a separate unit where it's basically a little house in the back or to the side, or it's a fully furnished basement where essentially it has either a room, a little living area, and a bathroom and a kitchen. So typically that's what it is. So it takes basically is a little area where you can put people there where you have just enough to survive. Isn't anything too fancy. And that's kind of what I was looking for to try to make my own type of duplex house hacking situation, because the duplexes in Atlanta were, for the price that they were selling for, they wouldn't cash flow. But the in-law suites, you could make them cash flow, or at least become relatively cash flow. You can at least break even. So that's kind of what an in-law suite is. And I think I listened to Big Pop, so it's like 1,000 different names for it, but typically it's called an in-law suite or an ADU, which is an accessory dwelling unit. Yeah, it's very popular in New York City. New York City is very popular for squeezing people in places. So
And to charge $5,000 for rent.
yep.
And Francesco, what about you from a first-time home buyer experience? Could you talk to Dallas about kind of how it went for you? And I believe, please correct me if I'm wrong, you were asking about for a woman going through this as well, like kind of what that experience would be like. But can you talk to just going through that, Francesco?
Yeah, I feel like the dude right before me perfectly explained the whole in-law suite situation. I have a basement myself, but it doesn't have a kitchenette, and it's halfway basically fully built. So I have to implement money into that space in order to profit. So as Nee said, his is like a separate entrance and all that stuff, room. The basement that I live in, especially in Baltimore, they don't really have how the South, they have like in-law suites that are attached. They're detached from the home because they have attached and detached ones. So yeah, here it's like really all basements. And yeah, that's currently what I'm working on myself. It's a long-term project.
Okay, thanks. I appreciate that. Yeah, I think I just wanted to know as far as like safety, like how are you able to, keep it separate? So like as a woman, that's why I brought that up. It's like, how can I still feel safe in my own home if I do it that way? But now I have a better understanding of what, it really entails. So thank you.
And I think it will be fine, because typically with the in-law suite, like I said, it's a whole separate unit. It's kind of like living in an apartment building. And number two is you will be the landlord, so you get to select somebody that you're comfortable with. So if you think that guy is a little weird or that girl is a little weird, you could just not accept that tenant and find someone who you are comfortable with. So yeah, I think it provides a lot of power. And I feel like with the way this world is, at least the way the trajectory that we're going on right now with these rents, like literally in New York City, a 3-bedroom currently is like 3,000. Oh no, not 3-bedroom. A 1-bedroom in New York City is about $3,000. In Atlanta, a 1-bedroom anywhere that's on the north side is about 16, 17, 1,800. So I think these in-law suites and these ADU units will be more important into the future, because everyone's going to want something that they could cash flow in, just to kind of help offset these mortgages and these high rent prices. I think that's why you've been having struggle trying to find some.
Yes. That's the key. But if you're able to find one and get it set up and kind of start pulling that income in, what I love from a resale standpoint is you can show the next buyer, like, hey, here goes my Airbnb income. Here goes my long-term renter that's in this in-law suite that will allow you to pay me more. Because let's say you're only qualified to purchase, like, have $2,000 a month in a mortgage payment. Now you can technically, if that in-law suite's bringing in $1,000 a month, they can use that with their lender and they can technically qualify for a $3,000 a month mortgage. And so you as the seller are going to have some leverage to sell that in the future. So yeah, Alpha, I'm with you. Like the houses I'm buying now, I'm looking for those ones that have some type of income potential outside of the regular home, because I think it's going to be needed more and more. And when you look at just the macroeconomics, like when you stop looking at the interest rates, you stop looking at like, hey, where are we in the stock market, things of that nature. When you look at just the macroeconomics, the largest generation that's alive right now is the millennials, right? And millennials, majority of them are between the age of 29 and 32 right now, which is the prime buying age. And so some may push it off a year or two or things of that nature. But as people are starting to build families, they're going to start buying and looking for these homes. And so if you're able to own some more of these assets, you're going to be in a power position to either rent them out, sell them, however you want to do. And so that's kind of what I'm looking at the long play. What else you got? Anything else? Francesco, I think you were going to say something earlier.
I did want to ask you this on the phone. I know that the market has been starting to switch and kind of slow down. I know we got seller credits back a month ago. What have you been seeing? Because I know, like, what have you been seeing in the Atlanta market, in the Louisiana market? And I said, not Louisiana, Louisville market. So kind of what have you been seeing in the market? I'm always interested in kind of what people are seeing in their local markets.
Yeah, I think you're spot on, right? The interest rate hikes that the Fed is doing is having the effect that they want, at least on housing. I don't know about on anything else, but on housing, it's having that effect. And it's like pouring cold water, on a fire, right? Because we were running off the ramp when you look at just the affordability of homes when the interest rates were low. And so raising the interest rates is to try to knock out some of the buyers and things of that nature. And I actually was talking to one of my friends and investors, and he put it really simply for me. He's like, yeah, every 1% that the Fed raises the interest rate, or every 1%, like say it goes from 4% to 5% for a borrower, that's roughly $100,000 less that you can afford. And so when interest rates were at like 3% or historical lows, you could afford maybe a $600,000 house. When it goes to 4%, okay, maybe you could afford a $500,000 house, 5%, and so on. It keeps lowering how much you can afford. And so with that being said, it's knocking some people out of that race, and it is allowing buyers to come back in and really negotiate for some of these seller credits and things of that nature. And the cool thing about acquiring these assets, and why I'm continuing to go out and help clients go out there and secure them, is because your interest rate doesn't have to stay that way forever. There's going to be a time period where they need to shift it back, right? There's always a balance to this. And when they start shifting it back, all you got to do is refinance. And now look, you got all this equity that you can pull out, and your value is going up and up and up. But to answer your question, yes, for sellers, if you do not have to sell right now, it's a good time to hold. In my eyes. I'm actually working with two sellers, one out in Douglasville that's trying to sell a home so they can buy one in Washington, and another that did a flip in the summer, but it was literally finishing right around the time where they started hiking rates. And they are both need to sell. One person needs to sell so they can buy their new home. The other person needs to sell because their debt to income ratio is too high and they're buying a duplex at the end of the year. Like they already kind of paid a good amount toward that. So yeah, if you don't have to sell, this is a good time not to. But if you are going to sell, you really need to list it right around the other comps or slightly below so that you can get enough people to bite early.
Do you think this is more of a long-term thing, or do you think it's just confusion in the market right now?
So
I was going to say, because kind of what I've been looking at, I think it's not even really, because I know the inventory is still historically low. Long term, and basically it's too expensive to build houses now, because if you build a house now, the material is expensive, but now the interest rates are so high, people's going to want to give you lower money because they can't afford the monthly payments. So I don't see the builders building. There's still low inventory. So I think right now is just everyone's just confused because the Fed is messing up the market and is like kind of like splashing around in the water. So I want to see, what do you think about that?
I think like literally, I look at it like when you had COVID, when COVID first hit, that time period from March to June was a time when everybody froze. People stopped buying because they were like, hey, what's going to happen? Is the world going to end? But looking back, that was one of the best times to buy. Interest rates were low. The sellers were willing to kind of negotiate with you and part ways with their properties. And then immediately after that, everybody jumped back in and it got crazy. And when you look at this time period with the interest rates rising and kind of, and recession worries and things of that nature, I feel like there's another pause in the market that's given an opportunity for people that are thinking like us and understanding the macroeconomics, like, hey, there's still a short supply. People are still going to need these homes. The thing that changed is that it went from a seller's market where you could get a loan for 3%, 2%, et cetera, and you'd list your home today. It'd be under contract 3 days from now, sold in 14 days, which is not normal, to, hey, your home's been sitting for 2 weeks, 3 weeks, you don't have an offer, which is normal. Like 3 years ago, that's perfectly normal. But because people got so used to their home going under contract in 24 hours, 48 hours, highest and best, now they're freaking out, lowering the price and willing to negotiate, which is helping us. But to your point, I look at this as a small window, depending on what the Fed continues to do, though. That window could extend depending on what they do. I know they're set to meet on September 20th, so like 3 weeks from now, and all indications are that they're going to hike the rates again. So it may keep extending this, but once they kind of slow down a little bit, I think people will realize like, hey, this is back at the normal rates, like that 5-6% is still historically low over a 40-year period, and people will jump back in.
It was probably the most direct way that he ever said it. Basically, he said it's his job to slow down the economy, and he's okay with people losing their jobs.
Pretty much.
Yeah, so I was like, I'm not sure if you guys are into stocks, but like the whole stock market has been down the whole week. I think the S&P is on about 4 to 5%, which is a lot. So I think he's going to keep hiking rates at least until December, like, because he's been saying it, but people say, hey, inflation's slowing down. They might just stop doing what, and also next month is the next month when they start doing the quantitative tightening and removing money off the balance books. So they're going to try to slow it down. That's their goal.
Agreed. But when I look at this, I look at, so they are, I think September 20th, if I was a betting man, I'm 99%, I'd put the money on the Fed hiking the rates at least half a point, maybe 0.75 again, because I think inflation for the last month, and it's always backdated, I think it was like 8.5%, something like that across the board, which is still high. When they're shooting for 2%, 8.5 is significantly high. But when I look at and take a step back and I look at the 5-year view, 10-year view, or even the next 2 years, millennials are coming of age to buy. They may be pausing for, hey, let me wait 12 months, let me see what happens, etc. But if you're building a family, you're going to buy at some point. And when I even talk to others, and I think Francesco talked about it a little bit earlier before he had to jump, his neighbor's renting out by the room $1,200 a month. There's somebody, one of the investors that I work with, a flipper in Atlanta, she's renting a home in Midtown. They took her rent from $1,750 to $2,000, right? With the turnover. And it's like, hey, you can just go buy a house. But now if the houses are becoming unaffordable, you have to rent. And if you have to rent and they keep raising the rents, who's going to benefit? The person that owns the homes is the person that can be able to say, hey, inflation, I guess I got to raise the rent. And the renter has to continue to pay that if they want to live that quality of life. And then on the flip side, if the rates start going back down and the homes become a little more affordable and people can pay a little more for them, the person that owns the home is still in power. So in my mind, I'm like, hey, inflation or no inflation, if I can own as many of these assets, it gives me a lot more flexibility to kind of move things around and navigate with the waters wherever they are. Kendall, you've been quiet, man. You sitting back, taking it in? What you got?
Yeah, man, I'm just listening. But I am curious though, like with the investors that you are working with, what's like the typical strategy that you're seeing people use right now? Is it for the most part like buy and hold? I know short-term rental is still a big thing as well. I'm just kind of curious your thoughts on that.
Yeah, I'll give you a real scenario right here. So, well, 2 scenarios. The thing around Atlanta is the homes are still appraising, right? These homes are still worth X amount. They've gone up significantly. If your neighbor bought their home for $740, your home's worth $740 if it looks like that. The thing is, with interest rates going up, there might not be a buyer that can afford that right now. And so that same buyer that would have paid 740 is now looking at you like, hey man, 675, right? And you're like, no, it's worth this much and it will appraise for that much. It just depends on who's out there right now to purchase that. And so there's a lot of flippers that have gotten caught right now because the interest rates went up so quickly. And I actually invested in a deal on this flip that we had out in Buckhead that was listed for originally 730, and there's plenty of comps to support that. That being said, 730 was the pie in the sky number. And I've talked to the flipper like, hey, this should have been like 700. This is the wrong time to try to do that. But I was just a private money investor on this one. And long story short, she's had to reduce that from 730 to 715 to 699. And I was talking to her yesterday, somebody threw in an offer at, I think like 675 or something like that, which is still cutting into her profit, right? It's like, it's going to be a little tight, but she's considering it because you've got to pay back me, hard money, and others, and the timeline's coming up. This home was supposed to be sold in May. Now it's coming up on a year in October. And that's because of how quickly it shifted. And so to that point, another strategy that she could use, but she doesn't want to because she's got other projects that she wants to shift the funds to, is just refinance it. If you refinance it, it's going to appraise for that 730, maybe higher. The piece is that you have to leave some money into it and hang on to it until you sell like a year from now or 2 years from now. That's a strategy that I see a lot of people doing that fix. It's almost like the first strategy, right? You buy, rehab, refinance, repeat, because the value is still there. It's just if you want to do a flip and sell it on the market, you've really got to know your numbers and you got to list it right with, what's going on.